Now, before we start talking about specifically policies in credit, for example, or legal or technical, let's be a little generic about the word policies itself. So let me start by giving you an example, and then we can try and define the word policies. So if you wanted to travel abroad to some country, the country will have laid down its policies. You need a passport, a valid passport, you need a visa, you need a ticket, maybe you need an insurance policy for medical emergencies. Now, these are specific to each country and they are policies that the company lays down. To clarify, the actual application that you make for a visa, you go for an interview, the visa officer reviews your application and decides on what criteria he should give you a visa or reject your visa. Now, these are stages and steps. The actual process of going for the interview, filling out an application form is not policy. That's a process. But the process evolved from the fact that the country had a policy that you need an application. The country had a policy which spells out what is required in the application. And most importantly, the country will have a policy on whether to give you or not give you a visa. Certain criteria will be laid down by the country. You should not have, say, for example, having a criminal case against you. You should not have entered the country illegally in the past. These are all policies. Now, when we switch to lending, policies have a similar definition or a similar concept. A policy is actually a framework. Every lending institution has a risk appetite. Every lending institution responds to a market environment. In response to that, and of course, the lending institution also has a customer profile, a domain, a particular segment of the target market group that they want to address. Now, in order to do that, they must have policies. Again, then what is that word policy? The policy is purely and simply a structured document which has to be dynamic because it also reflects what are the regulatory requirements, also the risk appetite that the lending institution has. So, for example, and some of you as lenders will know what I'm talking about, the policy on what is the maximum installment income ratio is listed in the credit policy. Every organization will have policies for credit, for legal, for technical, for HR. The amount of leave that you can take is a policy. However, the process of applying for a leave and getting it sanctioned is something that flows from the policy and is called a process. There is a policy for recoveries. There might be a policy for how to accept deposits if it is a deposit-taking lending institution. So let's talk about the credit policy to start with. The credit policy very simply lays down the playing field, the rules under which a credit decision is made on whether to give a loan or not. We will discuss various elements of that as we go forward. Now, the two important things that a credit policy must have is a recognition of the risk appetite of the company. A credit policy is not defined only by regulations. Regulations does play a role, and if the regulation requires, for example, not more than a certain amount of loan to be given as a ratio to the property value, then that is a policy that is compulsorily and necessarily built into the credit policy of every organization because it's a regulation and therefore applies to the industry. However, from a risk perspective, the appetite of the organization is different from another organization. And that is why a credit policy must be specific to a particular organization. It must be dynamic. It must change with evolving situations. Recoveries is the other aspect that influences credit policy. Depending on the behavior of your portfolio, you might want to either strengthen it, make it tighter, or loosen the reins a little so that you can bring in more business without compromising on risk. So risk, regulation results in setting of rules, and that rules is the policy. It brings a sanity to the decisioning process. It ensures 4 or 5 things, and we'll talk about those 4 or 5 things in the next capsule. But these policies become an extremely crucial foundation of bringing standardization, sanity, and some semblance of logic to a decisioning process. It spells out the rules under which you establish the processes of the organization.